I used to be terrible at savings. I had a checking account, a basic savings account, and a retirement plan that maybe I contributed to. Sound familiar? My money would just go in and come right back out, leaving me like I was running in circles. In this video, I'll show you how these accounts work, why they're so powerful, and then how to set them up for yourself. By the end, you'll have a clear plan to save smarter, have less stress, and hit your financial goals faster. Stick around, it'll be worth it. The 3 accounts that you'll need are a short-term savings, no more emergency funds, a lifestyle account, yes, because saving can be fun, and a long-term savings account because retirement. I'll walk you through each one, but first let me tell you why this worked. Most people fail at savings because they don't have any structure. When money sits in one big account, it's easy to pull from whenever they feel like it. That's why separating your money into specific accounts with a specific purpose is a complete game changer. Let's start with the short-term savings account, or what most people usually traditionally called an emergency fund. Personally, I hate the name emergency fund because it makes you feel guilty and anxious every time you need to use that money. So what is this account for? It's for 2 things. It's for planned expenses, that you don't pay on a monthly basis, but that are coming throughout the year. Say you got to fill your oil tank, or you got car taxes coming up at the end of the year, or birthdays that you're going to be spending money on. The other thing is unplanned expenses. Maybe you get laid off for a little bit, or you get a flat tire, or some medical bills that pop up. So why is this account important? Before I set this up, every expense felt like a crisis. You would take a car, for example, you have to $500 repair. All of a sudden, now you're putting it on a credit card and starting that debt cycle. And this account broke that pattern. So how do you set this up? So you're going to take all your expenses and that are coming up, and you're going to add them together. For example, let's say you have a car payment, car repairs for $500. Let's say you have holiday gifts that are coming up that are like $600, and insurance premiums like $800. So you add all that together, it's about $1,900. You're going to take that, and then you're going to add a 10% buffer to that for anything unexpected. So let's say that brings it up to a 10% plus 19 is like 2,000 and change. Divide that out by 12, and then that's going to give you how much per month that you actually need to save. And that small amount, I think it's $175, will be a lot easier to do than all at once. So where to keep it? Use a high yield savings account so your money grows while it sits. Pro tip, so automate your deposits. And you can do that through either your payroll company at your job, or right out of your checking account every single month, because you're not going to see it, so therefore you're not going to miss it. Now the lifestyle account, here's where it gets fun. It's for those big, expensive, fun things you want, but you just can't pay for right now. Maybe it's a dream vacation, or an addition to the home, maybe even a new car. Why this fund matters? Well, let's say a few years ago I wanted to take a trip to Hawaii, and I didn't have the cash to pay for it at the time. Just swiped it on the credit card. Well, after a few years, I've gone back and I'm now paying that off, and I'm paying all the interest on the trip that I had, and now it costs more than what it would originally paid if I just went on the trip. So by having this account in place, you can go on the trip, you can go debt-free and guilt-free and really enjoy yourself. So let's say you want to take a $10,000 vacation in 5 years. So how you're going to set this up is you're going to take your $10,000, divide it by 5, that's $2,000 per year. And then you're going to divide that by 12, $167 a month. Sounds pretty doable, right? Now, like your savings account, you're going to keep it in a high yield savings, or because of the time frame, you might be able to use some municipal bonds or maybe some treasuries, money market accounts, just to give you a little bit extra boost because you have a little bit more time. But you want to keep it in those safe investments, so that way you're not exposed too much to volatility of the market. Pro tip, just set one clear goal at a time, like save for the vacation before you start the home repair. Finally, we have the long-term savings account, which is for retirement. And it's a no-brainer, but it's the hardest to prioritize because retirement just seems like it's so far away. So why it's crucial is because you're not going to want to work forever, and Social Security alone is just not going to cut it. So start saving now, and your future self will thank you for it. How much to save? So start with about 10% of your gross income. Then, as your income grows, shoot for a goal to 15 to 20%. Where to save it? Employee-sponsored plans like a 401k or a 403b, or individual accounts like a traditional IRA or Roth IRA is where you're going to put that money. Pro tip is if your company matches, let's just say 5%, you're going to put up to that match, because why not? Free money, right? So how to prioritize this? So you're probably wondering, which account do I put in first? Well, the first one you're going to want to do is your long-term savings, because retirement, and your future self will thank you for it. Second is the short-term account, because that way you'll avoid any emergencies and extra debt coming in, so we can eliminate that. Then lastly is the intermediate or lifestyle fund, because why not? It's fun and you can enjoy your life, and you got to do that. That's important too. So what makes this all work? Setting up an automatic deposit for each account, savings become effortless. You don't have to think about it, and you're not tempted to spend it while you're going in the process. Savings just happen. So the 3-account system completely changed my life. It helped me hit my goals faster, it helped me feel less stress, and it gave me structure. Now it's your turn. Start small if you have to, but pick an account to start automating. Your future self is going to thank you. Now, if you want to know how we handle the spending portion of it, not just the savings, we have 2 checking accounts that we set up, and we'll link it to a video that's coming up soon. Let's just make saving simple and your money work for you.